From the morning reading, all-time new high close on the Dow Jones Industrial Average and the NDX. SPX and the RUT closed near recent highs. Nike positive earnings per share reactions. Breadth strengthened compared to the prior session as advancers led 1941 to 1076 on the New York Stock Exchange and led 1807 to 962 on the NASDAQ. On the S&P 500 snapshot, another advance and just shy of record close. The Dow posted another record close today, and our preferred equity benchmark of the S&P 500 came very close to following the example of its elderly cousin. The 500 finished the session with a mere 0.04% below its record close 5 market days earlier on December the 13th. The index popped at the open, hitting its 0.44% intraday high about 15 minutes later. It then zigzagged downward to a 0.16% mid-afternoon intraday low. An uptrend during the final hour lifted the index to a 0.36% closing gain. Mutual fund traders have left the short side. In July, we saw that traders in the RIDEX family of mutual funds were aggressively buying into the stub theme of defensively focused funds. That pretty much marked the peak of that movement, and they've been swinging to the other side in recent weeks. That hasn't quite moved to an extreme, but one area where they are showing an extreme is the inverse bearish index funds, whose assets have collapsed by 75% and are among the lowest in 20 years. There is now $20 invested in bullish funds for every $1 in bearish funds, a level exceeded only once in 20 years. At least stocks have kind of broken out. In October, the S&P 500 broke down out of what had been a coiled up pattern from the prior 2 weeks. Now it broke out to the upside from the same pattern in a daily time frame. There is some good news for the bulls there, as stocks tended to perform better going forward after upside breakouts than downside. The enthusiasm for RIDEX traders is extreme. The 5-day average of the bull-bear RSI spread is above 95 for the first time since April 28, 2011. The Beta Chase Index shows that in recent days, these traders have been 7 times more likely to trade an aggressive fund than a defensive one, the most extreme reading since August of 2012. They are not perfect indicators, but they are good heads up that this particular group has suddenly become extremely bullish, and that rarely turns out well for them. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:14 a.m. Mountain Time, and I am recording this in preparation for the market day of December the 21st, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into the morning report. Okay, at the time of this cut, all 4 of the U.S. broad-based indices were rotating around scratch, 3 of them just below scratch, and the Dow just above scratch. Crude oil is up about 0.5%. Euro's up about 0.25%. Bonds are at scratch, and gold is up about 0.25%. In overseas action, looks like everybody's open. China and Hong Kong are both up about 0.33%. There's something wrong there. Ignore the China number. That one's wrong. The other numbers will be right. Hong Kong's up about 0.33%. Japan's up. Japan's actually down about 0.25%. Germany right around scratch, as is the United Kingdom. In terms of macroeconomic reports for today, of note for the United States, you have existing home sales. You have crude oil inventories weekly report. And then looking forward to tomorrow, we have core durable goods, GDP, weekly unemployment claims, durable goods orders, and core PCE price index, personal spending. So quite a bit for tomorrow. Also the natural gas storage report, so be aware of that. Looks like Japan will be closed tomorrow. Also take note of that. In terms of current volatility conditions, short-term VIX still down below a 10, 9.85. Skew has scrubbed off and is now back below the threshold in which we activate a caution. IV percentiles are exceptionally low. This should be an 8 on the S&P, a 12 on the Russell, a 7 on the NASDAQ, and a 10 on the Dow. We did have a standard deviation move put in on a close-to-close basis on the Russell yesterday, a positive 1 standard deviation move there. And then let's go ahead and go to the charts. And our S&P futures, you can see we're still playing around inside this sideways consolidation pattern. And yesterday's close was right in there with the close of several sessions ago. One of the morning authors mentioned that. So we certainly are playing near the top of this consolidation range, but have not yet broken out. From a very, very short-term pattern, you can see that we've got something of a triangle forming and an ascending triangle, and this would be expected to break to the upside. So certainly this horizontal breakout would be your trigger to look for another leg up. Now, don't keep charts out of context with your seasonality. Our seasonality is for a bullish move, a slightly bullish move between now and the first session or two of January. But at the same time, the robustness of that move could be quite muted as participation and volume has already declined significantly and will continue to decline into this weekend and then especially next week. So even if we do get high breakouts on the Dow, and you see the Dow's at the very verge as well, yesterday had a new intraday high, and certainly it was a closing high for the Dow. So it's about the breakout of this area as well. The bottom line, though, is how far does it go, given how far it's already gone, and the seasonality influence. Those are all kind of factors that would probably kind of put a blunted end to how far and how much energy we get on the next leg. Of course, on the Russell, it's also up against its near-term resistance area, horizontal resistance. And then finally, the NASDAQ also up against its horizontal resistance, but it did have a new closing high in the NASDAQ futures yesterday. So we continue to press to the bullish side. There seems to be very little risk to the downside at this point. And yet at the same time, things are starting to get a bit extreme. You heard several of the stats from one of the morning authors showing how there was an awful lot of money on one side and not on the other. And oftentimes that is kind of a setup for a retracement. So don't get too complacent here. While everything on the charts and so forth looks very, very solidly bullish, we could easily at any time have a retracement. That retracement would be expected to be relatively small, though, given the overall market postures. In other markets, we see crude oil also pressing up and had a new 52-week closing high yesterday. And then gold still in a sideways short-term consolidation pattern, but in a very important, very strong bear pattern for the intermediate, as is bonds. Also, short-term consolidation pattern in a strong bearish intermediate term pattern. And then let's take a look at the dollar. Dollar's also in short-term consolidation with an intraday high, 14-year high put in yesterday, and we continue to press upwards on the dollar. And then finally, volatility. Volatility continues to be pretty exceptionally low. We're currently trading around 11.36, and you can see the 52-week low, 11.02, and anything below a 12 is pretty exceptionally low, and indeed starts to become a warning of, just to have your radars going, looking for the potential for increasing volatility. Well, that should be enough on the charts. Let's go ahead and go to the daily report. Not a lot of changes here from yesterday. Everything's still very solidly bullish. Market phase 4, price patterns near resistance and extension patterns. Also, and there are 3 market timing signals. The first from IBD, confirmed uptrend. The second from the GMI index, a perfect 6 out of 6 with the buy signal in place since 11:10. And then with the stock charts decision point scoreboard, very solidly bullish on the short and intermediate term, with the long term being our remaining bugaboo in terms of mixed signals. In terms of position sizing opinions, still both at 100%. Intermediate term market posture, all very, very strong bulls. We got exceptionally strong bulls across all 4 indices, and that's further supported by the exceptionally strong bullish sentiment line. So, as I said, if we do get a retracement with so much money all on one side, it frankly would just likely be a buying opportunity and relatively mild retracement unless some new news comes into the marketplace to reset that expectation. In terms of hedge warning status, level 0 plus, normal with some elevated conditions. In terms of the 3 strategy opinions, really the only thing of particular note is on option incomes. The VIX is now below the acceptable range to initiate new positions for novice traders. This is recognition that the VIX is below a 12, and the amount of premium that you're currently being paid with respect to the amount of risk that you're putting on is starting to get a bit skewed and difficult, especially for novice traders. In terms of specific areas of warnings, you can see this volatility ratio still in that reset to firing position. Also, the VIX daily squeeze is still present. So these are both conditions, along with this VIX being underneath a 12, that basically says that volatility is really low, and in a condition in which you're starting to watch very much so for an expansion of volatility. Also, distribution day count on the NASDAQ continues to be relatively high. Did scrub off one down to a 6. We'd like to see this come down below 5. Trend base, everything solidly bullish there. Intermarket risk aversion indicators. We've got 3 of the 5 now as risk off. So we continue to see this one being at best neutral, and at worst, potentially signing to us that we are, at risk of a reversion. In terms of sentiment indicators, relatively benign. 6 on the short term, 7 out of 10 on the intermediate term. You see the fear and greed index is 79. It's still in the extreme greed area, but it has been scrubbing off from the even more extreme settings that we had, several sessions ago. In terms of sector specific, you can see it was a pretty positive day across all the sectors yesterday. The only negative ones, consumer staples and energy, were only mildly negative, and only about half of the components were negative on the day. Healthcare essentially scratch. So probably the biggest news here is that healthcare continues to be the most disappointing sector, and that we were still seeing a mix of both risk on and to some degrees more defensive areas, also doing well. Certainly most of the better activity yesterday was risk on type activity: financials, consumer discretionary, industrials, and information tech. 4 of the top 5 sectors, and those are all risk on type of sectors. And the market posture, all 3 time frames, pretty much a sea of green. Healthcare continues to be, if anybody's weaker, the one that you kind of point to. And you see a bit of a mix on some of these sectors, but look at where most of this red is. It's healthcare, it's consumer staples, it's real estate, perhaps even utilities. these more defensive, these stub type of areas, consumer staples, telecom, utilities, and long bonds, these defensive risk-off types of sectors are generally the ones that are performing the worst in relative performance at this point. Okay, I think that's probably enough for today. Let's go ahead and roll this thing up. I'm going to scroll through some slides here. If you see something of interest, just hit the pause button, get you greater detail, and then also note the hyperlink that will take you to a website with even more information about that subject. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. We'll be back here next for tomorrow's market preview from Falcon Global. And in the meantime, manage that risk profile and go out there and learn something about your craft each and every trading session. Good trading.